It is 7:43 in the morning. The market opens in 47 minutes. You are already at your desk. Two monitors, a coffee going cold on the left, a chart on the right with lines you have been staring at for an hour. You made $340 yesterday. You lost $490 the day before. This morning, you do not know which version of today is coming. This is day trading. And before anyone tells you how much you can make, someone needs to tell you exactly how much capital you need just to survive it. That is the question nobody on social media is answering honestly. So today, we will. Most people come today trading with a number in their head. A dream number? A freedom number. They see someone online turning $500 into $11,000 in a week. They see the screenshots. They see the Lamborghinis. They do not see the 3 years of blown accounts that came before the screenshot. They do not see the quiet Tuesday mornings where the number went the wrong way, and nobody posted about it. They do not see the version of the story where the guy goes back to his old job 6 months later and does not tell anyone why. You are not here for the screenshot. You are here for the truth. So let us start at the beginning. You want to day trade stocks in America? You open an account? You make 4 trades in 5 days. Congratulations. The government now has a name for you. You are a pattern day trader. That name comes with a rule. The rule is simple and it does not bend. You must keep a minimum of $25,000 in your brokerage account at all times. Not as a suggestion, as a legal requirement. Drop below that number on a Monday and your account gets restricted by Tuesday morning. You cannot trade until you fund it back up. This rule has existed since 2001. It is not going away. So $25,000 is the floor. But here is what nobody tells you about the floor. The floor is a trap. A 10% losing week on $25,000 brings your account to $22,500. Now you are restricted. Now you cannot trade your way back. You are frozen out of the market at the exact moment you need to recover. Every experienced trader will tell you the same thing. You do not start with $25,000. You start with $30,000 to $50,000. The extra money is not profit, it is oxygen. It is the room you need to breathe through the losses while you are still learning how to trade. There will be losses. There will always be losses. The question is whether you have enough money to survive them. Now let us talk about what living actually costs. Not vacations, not dinners out. The basic shape of a life. Rent, groceries, health insurance, a phone bill, a car. For the average American in 2025, that number lands somewhere between $3,500 and $5,000 a month. Call it $4,000. That is your target. That is the number your trading account needs to produce every single month just to keep the lights on. Not to get rich, not to save for retirement. Just to stay alive without a paycheck coming in from somewhere else. Now here's where people get very quiet. A realistic, disciplined, experienced day trader might consistently return 3% per month on their account. Not 30%, not 10%. 3. In a good month. Some months it is 1%. Some months it is negative. But 3% is the number professionals point to as genuinely sustainable over time without destroying your account chasing bigger returns. If you need $4,000 a month and you are returning 3% a month, you need roughly $133,000 in trading capital to hit that number. $133,000. Not $10,000. Not $25,000. $133,000 sitting in your account, working every day, managed by someone disciplined enough to actually earn that 3% consistently. And most people are not there yet, and that is okay. But you need to know the real number before you quit your job. You have a friend. Maybe you already know someone like him. He watched the videos. He read 3 books. He opened an account with $8,000 in savings. He quit his job in month 2 because he had a great month. He made $2,100 in 23 trading days. He told everyone at dinner. He posted the screenshot. Month 3, the market shifted. His strategy stopped working. He lost $3,400 in 2 weeks trying to force trades that were not there. Month 4, he was back working a job, and his account had $1,900 left in it. He does not talk about trading anymore. He is not a failure. He is a statistic. Studies consistently show that more than 80% of day traders lose money in their first year. Nearly 40% quit entirely within 1 month. After 3 years, only 13 out of every 100 people who started are still standing and profitable. Your friend did not lose because he was stupid. He lost because he did not have enough capital to survive the learning curve. The market does not care that you are new. It does not offer a beginner rate. It charges the same tuition to everyone, every single day. You are 2 years in. You have survived. You have a $75,000 account. You kept your job while you learned. You did not make the same mistake your friend made. You have learned the difference between a trade and a gamble. You know what your actual edge is. You have a journal with 400 trades in it. You know exactly where you make money and where you give it back. At $75,000 and a consistent 3% monthly return, you are making $2,250 a month. Not enough to replace a full income in most cities, but enough to cover half your rent. Enough to feel the account actually working for you instead of against you. So, you keep your job for one more year. You do not touch the profits. You let them compound inside the account. You watch the number grow without spending it. You stop checking the account every 20 minutes. The checking used to feel urgent. It does not anymore. You understand now that the traders who survive are not the most exciting traders in the room. They are the most boring. They take the same 2 or 3 setups, the ones they have taken 400 times before. They risk 1% per trade and never more. They close the app at noon and go for a walk. They do not revenge trade after a loss. They do not double their position size after a win. They protect capital the way a farmer protects seed in winter. You spend it and there is nothing left to grow. You are 4 years in. Your account is $150,000. This is the number. Not $25,000. Not $75,000. This is where the math finally meets the life. At 3% a month, $150,000 returns $4,500. That covers everything. That is the rent, the groceries, the car insurance, the quiet Friday night at home knowing nothing is chasing you. You sit at your desk on a Monday morning. The market opens. You take one trade. It works. You close your laptop by 10 a.m. You go to the gym. You come home. You make lunch. The account made more money while you were eating than your first job paid you in an entire week. You do not celebrate. You have learned not to celebrate single days. You look at the month is good. You nod. You write it in the journal. Tomorrow you do it again. This is not the version of day trading they sell you on YouTube. There is no Lamborghini in this story. There is a paid-off used car and a journal with 600 trades in it, and a Thursday afternoon that belongs entirely to you. The number people never say out loud is this. To live off day trading, you need somewhere between $100,000 and $150,000 in capital, 2 to 4 years of serious learning, and the discipline to treat it like a business and not a lottery ticket. Most people who fail do not fail because the market beat them. They fail because they started with too little money and too much confidence and not enough time to survive long enough to get good. The market is not a slot machine. It is a profession. And every profession has an apprenticeship. In this one, you pay for it yourself. The traders who make it are not the ones who made the most money the fastest. They are the ones who protected their capital long enough to figure out what they were doing. They are still at their desk 4 years later, taking boring trades, closing the laptop early, going for walks, and not telling anyone what is in the account. The mornings are still quiet. The coffee still goes cold. But the number in the account has a job now, and so do you. I'll see you in the next one.